Next question. There are two securities X and Y. Standard deviation is provided 10 and 30. Correlation coefficient is negative 0.5. You are required to answer following questions. Find minimum variance portfolio. It means that's in what proportion the investment to be made in this two so as to have the least risk, lowest risk. And further, compute risk at that point of time. Second question, if investment is made as under, that is, so the X and Y weights have been provided to us, X and Y weights have been provided to us. Calculate the risk of above portfolio, that is a question. So basically we are required to make the four calculations over here. First is the minimum variance portfolio. Second is so the risk at that point of time. Third is so the standard deviation for like the 0.85, 0.15 and 0.75, 0.25. I want you to make the calculation of answer of the first question and put your answer in the chat box. I request you to make the computation of the weight in 4 decimal points. So answer of the question will be found like this. Wx is equal to variance of y minus covariance between x and y divided by variance of x plus variance of y minus 2 covariance between x and y. What is variance of y? It is 30 raised to 2. Minus covariance xy is negative 0.50 into 10 into 30 whole divided by variance of x. We understand that so the variance of x is 10 raised to 2 plus 30 raised to 2 minus 2 into negative 0.50 into 10 into 30. So square of 30 is 900. 10 into 30, that is 300 into 0.5 is 150. 10 into 100 is, sorry, square of 10 is 100. Square of 30 is 900 plus 30 into 10, that is 300. 300 into 0.5, that is 150. 150 into 2, that is 300 once again. So 900 plus 150, that is 1050 whole divided by 100 plus 900, 1000 plus 300, that is 1300. So the final answer comes to 1050 upon 1300 0.8077. That is the weight of X. So weight of Y will be balancing figure. It is 1 minus weight of X. So 1 minus 0.8077. 0.1923. That is the way the weight of Y is calculated. Okay. Now the question says that say compute the risk of the portfolio at that point of time. Variance of the portfolio is Wx square sigma x square. Wy square sigma y square. 2 into R into Wx Wy into standard deviation x standard deviation y. So 0.8077 raised to 2. 0.1923 raised to 2 into 10 raised to 2, 30 raised to 2, 2 into r, that is negative 0.5, into weight of x is what? 0.8077, weight of y is what? 0.1923 into 10 into 30. 0.8077 square into 100, 65.2379. Square of 0.1923 into square of 30, that is 900. So 33.2814 minus 2 into zero point 0.5 negative into 0.8077 into 0.1923 into 300, 46.5962. 65.2379 plus 33.2814 minus 46.5962. That comes to 51.9231. That is the way the variance of the portfolio can be calculated. Once you make the computation of the variance, then you can compute the standard deviation. Standard deviation of the portfolio is under root of the variance. So under root of 51.9231. So it comes to 7.2058. That is the standard deviation of the portfolio. I want you to calculate the standard deviation of these two portfolios as what they have provided. Sorry. These two portfolios as what they have provided, and put your answer in the chat box. So let us compute the risk of the portfolio for 0.85 and 0.15. That is the way we are required to make the computation of first of all variance of the portfolio. Wx square sigma x square, Wy square sigma y square, 2 into r, Wx Wy sigma x sigma y, square of 0.85, square of 0.15 into square of 10, square of 30, 2 into negative 0.5 into 0.85 into 0.15 into 10 into 30. Square of 0.85 is 0.7225 into 100, that is 72.25. Square of 0.15 is 0.0225 into 900, that is 20.25, minus 2 into 0.5 negative into 0.85 into 0.15 into 300, that is 38.25. 72.25 plus 20.25 minus 38.25, 54.25. Standard deviation of portfolio is under root of the variance. So it is under root of 54.25. That comes to 7.3655%. This is the standard deviation of the portfolio if at all the investment is made in this proportion. Now the next question says that you change the proportion 75-25. So again, calculation of sigma p if Wx is equal to 0.75, Wy is equal to 0.25. That is what we understand. Sigma p square is equal to Wx square sigma x square, Wy square sigma y square, 2 into r into Wx sigma x, Wy sigma y. What is weight of x? It is 0.75 raised to 2. What is weight of y? It is 0.25 raised to 2. Standard deviation x square, standard deviation y square, 2 into r, r is negative 0.50, into weight of x, weight of y, standard deviation of x and standard deviation of y. Square of 0.75 is 0.5625 into 100. So 56.25. Square of 0.25 is 0.0625 into 900. That is 56.25 once again. Minus 2 into 0.5 negative into 0.75 into 0.25 into 300. That is once again 56.25. So final answer, variance of the portfolio is 56.25. Now based on this standard deviation, it is under root of 56.25, 7.5%. That is the way we can compute the standard deviation of the portfolio for this proportion. So in total, again, there are three portfolios that we have, X and Y. The first is 0.75, 0.225. That recently we have found. The risk is 7.5%. Then for minimum variance, that is 8077 and 0.1923. If at all you invest in that proportion, then in that case the risk of the portfolio is 7.2058. And the last is 0.85 and 0.15. In that case the standard deviation of the portfolio is 7.3655. So what happens, let's say we understand, if at all you make investment as per minimum variance portfolio, then in that case, so the standard deviation of the portfolio is going to be 7.2058. You can see that if at all you make investment as per minimum variance of portfolio, in that case the standard deviation of the portfolio is not zero. Why? Because the correlation coefficient is not -1. Again, if at all you deviate from that proportion by increasing the weight of x or by decreasing the weight of x, in both the cases the standard deviation of the portfolio is greater than this, greater than this. This is what we understand is the application of the minimum variance portfolio. So this is the minimum variance portfolio and if at all you deviate from it, risk will increase. Please write on a note. From above working, comma, we can say that if investment is made as per minimum variance portfolio, comma, risk of portfolio will always be lowest. Full stop. If R is other than -1, comma, sigma p will be more than 0. Full stop. If R is -1, then sigma p will be 0. If at all investment is made in any proportion other than minimum variance portfolio, comma, in that case sigma p will be more. Full stop. Any other means, it may happen that the weight of X is more, or it may happen that the weight of Y is more.